This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks here on Stockbox with Alan Green. Alan, the end of yet another week. Are you doing okay?
I'm doing fine, thanks, Mark. Yes, where's it gone? Where's the week gone? But of course, we better not talk about the weather in the week too much because we might upset some people, and we wouldn't want that to happen.
No, the weather is it's a typical British thing to talk about, but maybe we do talk about it too much. I don't know, but it's been certainly a busier week for us anyway here at Stockbox. So I know we were talking about the slower start to the year, but certainly this week's been pretty busy. So maybe things are picking up again. I don't know what it's like on your end.
Yeah, very much so. I mean, we've had a lot of interaction with clients this week, and talking to some new clients as well, looking at what we're doing, and there's a real sense things are starting to move. And I think also the Bank of England's governor this week saying that although interest rates are going up, they're now seeing a bit of light at the end of the tunnel, and things are peaking, and obviously we're seeing inflation starting to fall in the US as well. So that's a good thing, and let's hope it continues and the backdrop improves.
Indeed. Well, today we're going to be talking about Panther Metals, and they had two actually pieces of significant news this week. Darren was very excited about what's happening there, so just get a catch up on that. And Harland and Wolff as well from you.
Yes, indeed. Yeah. So certainly starting with Panther Metals, of course. Darren Hazelwood, we both know him very well. Very much poacher turned gamekeeper. Of course, Darren is a long-standing investor into stocks of all sorts, but in particular mining and resource stocks. And he took over at the helm with Panther a few years ago, and he's done a fantastic job in shaping this company. But I think, along with pretty well every other stock in this sector, he's not seen the rewards from the progress they've made feed through to the share price. And of course, I'm looking at the shares now. They've been at a year high of 12 pence, down at 4.2p now. So we are literally at those year lows now, which seems odd to me given the progress they've made. So I think darkest hour is always before the dawn, and I think there are so many resource stocks in this position. But I think Panther more than most have got such a great spread of assets that I think this is one that's really going to recover very quickly indeed. So just a quick overview of what the group do. The Panther Metals have assets both in Canada and in Australia. And in Australia, there are primary assets, the Coglia and Red Flag assets. Coglia, of course, is in Western Australia, and there's a JORC resource on a cobalt and nickel asset there. There's also the Burtville East Gold Prospect, which is in the region too, and then in the Northern Territory, the Annabrew and Maracay assets, which the company sort of got into a few years ago, both in Northern Territory, and these are near, close to active gold mines and active gold projects in the region, but they're very much dormant at the moment. Then we move to Canada, and in Canada, Panther Metals have assets in the both the Schreiber Hemlo Gold Belt area, and then to the west of Lake Superior, where they have assets in a region called the Abonga Greenstone Belt, which is it's about 2.5 hour drive from Thunder Bay, which is of course sited at the western end of Lake Superior. So I'm going to basically pick up on where the company was at the half year, and then look at the developments from there, because some significant progress has been made by the group. Firstly, what Darren and the team have done over time is build positions in in assets and then spin those assets off into separate companies. And of course, this is something that Power Metal Resources and Paul Johnson and his team have done very successfully. Darren started that particular process going. So if we look at Australia first, of course, the assets there were packaged up into Panther Metals Australia, which was listed on the ASX. And Panther currently holds 36.6% of the shares in that company, which of course makes it their regional operating company, but it's also listed too. And investors in Panther Metal Australia just get that focus on the group's Australia assets. So at that point, at the half year point, Darren and Panther Australia updated on the latest developments at Coglia and also Burtville East gold project. A reverse circulation drill program had been undertaken earlier in the year across 6,000 meters, where the group noted high nickel and cobalt intercepts. The final results came through, and we were looking at some pretty impressive numbers: 19 meters at 1.19% nickel. And then in some areas we were seeing some fairly staggering readings for other minerals, particularly copper. There was a 5 meter section which had delivered 2,592 parts per million, and then in one area in particular 1 million at 7,900 parts per million for cobalt. So that's an exceptional result by any standards. So on the back of that, the JORC estimate for the Coglia asset was revised to between 34 and 62 meters indicated at 0.4 to 0.6% nickel and 400 to 600 parts per million cobalt. So that's over a pretty large area. So there's real value in Panther Australia right there with that asset. Then, of course, we have the Burtville East gold prospect. The Burtville East gold prospect, there's some drilling work was undertaken during the year. An intercept of some 15 meters was identified, and this delivered from 27 meters down a pretty staggering number, 53.94 grams per ton of gold. And that's a very strong number right there from 27 meters down. So of course, again, you've got then the second the dimension of value that is built into Burtville East. Then on December the 8th, the company announced that the work that had been undertaken there had been added to a multiple numbers of new gold-rich quartz lodes had been identified, and also an extension on strike for the existing Burtville East gold asset. Some of the numbers there very impressive: 14.6 meters at 2.3 grams per ton of gold, and 0.3 meters at 24 grams per ton of gold. So the size of this asset is growing all the time. And of course, we've seen probably the most famous one in recent years, of course, the Haviran prospect in Western Australia, obviously owned by Greatland Gold. And again, some of the numbers coming out of the ground in the early days for Greatland were very similar to this. So hugely exciting from that from that standpoint. So that really summarizes where we are in Australia. So we then go to Canada, and there's an area in Western Canada that over the past year, the company Panther have bought into and now control 90% of this area called the Abonga Greenstone Belt. This is just a 2.5-hour drive away from Thunder Bay, very accessible. So obviously, it's it's a very well located asset. At Abonga, there's an area called the Awkward Prospect, wonderfully named, and of course the volcanic massive sulfide that was discovered there, and the 13 claims identified at Awkward, basically discovered a number of different minerals and assets identified there. But in particular, the most important step I think that's been taken at Abonga is that a couple of days ago, it was announced that flake graphite had been identified at Abonga too, at the Allgood prospect, and that's hugely significant. Of course, we've seen other great flake graphite projects develop. I've talked about Blencowe Resources recently in the Oran Cross project in Uganda. You take a look at the Blencowe share price is really starting to move north now, and I think there's going to be more value from that in the coming days. So that's a huge important element in the new clean energy economy that we're in now. So that's the Abonga asset. A number of other assets are owned by Panther in Canada. The Dotted Lake project, of course, this is back in Hemlo. And of course, the drilling work that was undertaken during the whole DL2101 noted widely dispersed gold mineralization 172 meters down, and the assay work that came back from that identified and confirmed that mineralization extended down as far as just under 400 meters down. So again, hugely significant there. Now, also in the same area, of course, we have the Big Bear Gold and Base Metals project. And as we were speaking last week, Mark, of course, we spoke about Fulcrum Metals. The Big Bear Gold and Base Metals project was sold to Fulcrum Metals, just about to IPO, of course, themselves, for £200,000 sterling cash, a 20% stake in Fulcrum Metals when it comes to market, and of course a 2% net smelter royalty. So again, Darren's positioning the company very well, putting assets into new companies, and Fulcrum Metals, of course, as we know, have a package of assets within within Canada, both in Ontario and Saskatchewan, and Big Bear is very much a key part of the Ontario assets. Also in the Canada or among the Canada assets, the West Limb and Glassreef gold properties purchased from Sheer Gold Corporation. This is up in the Manitou Lakes. It's classed by Panther as their Manitou Lakes asset. This was purchased for a paltry 11,000 Canadian dollars, but Panther have committed to spend some 325,000 Canadian in year one and year two of their ownership, with a further 400,000 Canadian dollars in years 3 or 4. And also what Sheer Gold Corp get from that is a net smelter royalty of 2% over these 32 claims. Plus, if Panther wish, after the work they've done, to acquire the project, they can pay 250,000 Canadian dollars to purchase those assets outright. So again, that's a very important step. Back in December, soil sampling work was undertaken at Manitou Lakes, announced by Darren and the team. The soil sampling almost doubled the strike extent of anomalous gold to 700 meters at the Barker area within the Manitou Lake assets. There's the historic workings, gold workings there also are further bearing out the quality of this asset. And there's a shear structure that the team are working on there that's some 1 kilometer long. Hence probably why the company that owned the asset initially was called Sheer Gold. But that's speculation on my part. So we then, of course, have back to Abonga. There's a joint venture with Broken Rock Resources, where drill permits have been submitted with Broken Rock Resources over 45 mining claims in an area called Puddy Lake. So again, there will be more news from that, no doubt. But then also, as along with the flake graphite that was identified at Abonga, the company announced on the same day an additional volcanic massive sulfide was discovered. The Wishbone volcanic massive sulfide VMS there already was extended with further wide intersections, and high grades of zinc were noted there. So again, this is the Bonga asset is really consolidating and developing into what is clearly a very valuable asset. So that in a sense is a summary of the latest developments from Panther. I mean, Darren Hazelwood said with the VMS discovery, it was a defining moment for Panther as a company. But obviously, where we are with the markets at the moment, that doesn't seem to have resonated. So hopefully, by bringing attention to it in this podcast, we can get investors to refocus on it. The website, the Panther website, has been updated. Some very good information on there now, so I'd highly recommend investors go there. But everything I've just described, the JORC asset at the Coglia asset in Australia, the spin-off, of course, with Fulcrum Metals, all of those assets, the Bonga assets all combined, Panther is worth just 3 million. It's nuts. It's absolutely crazy. With all those assets under its belt, it should be many times that, in my opinion. But then again, that's just my opinion. But I think whatever way this is, the markets are at the moment, these assets will realise value at some point, and I'm sure there'll be steps taken this year, and we'll see further value emerge from the Panther assets, and shareholders buying at this level will see a handsome return.
Indeed, I mean, Darren was very excited on the interview I did with him recently, talking about they're now looking at a VMS district, really, and he said that this is something that BHP didn't manage to actually do because they had to leave. Was it the Windy Craggy scandal? Is that what it's called?
Yeah, that's right. Yeah.
And I'm not entirely sure the story behind that, but a load of mining companies had to leave the area because of this incident that went on. But BHP were always quite bullish about what could be there. And Darren actually said, we've done what BHP didn't actually manage to do, which I thought was quite significant. And as you say, I think he said, it's like a watershed moment for the company to have got to this point. So that's excellent for the company, I think. And Darren was also quite keen to point out to me that, the market cap is very low, but they have access to a lot of liquidity fairly soon, as you mentioned there, with Fulcrum coming online, and of course Panther Metals Australia. So I think Darren is just biding his time a little bit there for those things to come on stream, so that there's access to capital there should it needs be. He's very keen not to dilute existing shareholders. He keeps talking about the cost of capital being quite high in these environments. So let's give him a little bit of time to see what happens in that regard. Of course, the field season in Canada starts in the springtime, so not too long away. It'll be interesting to see what Panther's plans are going into the spring. But for 3 million, it's a low market cap company with a good CEO and what's looking like to be shaping up some good projects and with some good potential there.
Indeed. Well, I think it's the spread of assets that has intrigued me. When you just look at the website, and everything I've just spoken about is it can clearly be viewed on the website. But the stake in Panther Australia, the fact that Coglia has a JORC estimate now, and the RC drilling that's been done has added to that. That's highly significant, and we've had some fantastic intercepts there too. And then the Burtville East prospect, I mean, really strong intersection, 53.94 grams per ton over 15 meters. That's commercial levels of gold right there. Those would be really strong head grades for any producing gold mine. And then I mentioned Coglia, and then of course the Bonga asset, which is that's very much the focus of Darren and the team at the moment, because not only is it a huge asset and one that's widely recognised, as an extremely fertile area geologically, but it's also for Canada, it's surprisingly accessible. It's close to infrastructure. It's a few hours drive away from Thunder Bay, which is on the shores of Lake Superior, and of course everything that entails. So I think the focus of Panther should rightly be on a Bonga this year. Let's get that progressed, get it moving, and of course, there are other companies operating in the area that I'm sure can share assets and share resources. First Class Metals, of course, operating in the area too. Very focused on the Schreiber Hemler Gold Belt, and also, of course, not far from the Abonga asset, and that's of course with the Sunbeam gold mine that they have there. So yeah, hugely exciting area prospect.
Indeed. Well, thank you for that, Alan. So now let's talk about Harland and Wolff then.
Harland and Wolff, indeed. So
Mm.
the eponymous shipbuilding company,
Mm.
which is of course iconic. I think it's the favorite TV set backdrop for many a TV series over the year. Those iconic yellow gantries in Belfast with the H&W very clearly on the overhang. But Harland and Wolff have an awful lot of history and go back to 1861, founded by Sir Edward Harland and Gustav Wolff, hence Harland and Wolff. And of course, this is the company that built the Titanic, and it's well documented what happened to the Titanic, of course. But nonetheless, they've produced many great ships: the RMS Olympic, the HMHS Britannic, the SS Canberra, marina supertanker. But they are a diverse company in terms of their offering. They of course have a very primary focus on defence and naval shipping and MOD work, and I'll come on to that shortly. But they do a lot of work with energy and oil rigs. They work on cruise ships and ferries and large fishing vessels. And then, of course, they have a structural arm which provides steel structure work for vessels, bridges, building, loading frames. And they also have a renewable energy arm as well, which works on wind turbines and so on. And they also own the Island Magee gas storage project, which has the potential to hold up to 25% of the UK's natural gas storage capacity. And it's this asset, I think, that there's currently in dispute with. There's currently a court case in progress, which will be resolved very shortly. And then I'm sure we're going to hear more about that. But given where we are now with the energy crisis that we as a country face and the world faces, there's every reason, there's a compelling reason, I think, in fact, to bring Island Magee back on stream and for it to be utilised. So the company has a number of depots and assets where it undertakes this work. Of course, there's the Harland and Wolff shipyard at Belfast, also at Appledore down in Devon, which that provides ship repair and shipbuilding facilities. Then we have both sides of on Scotland. In East Scotland, we have the Methil asset, which and the Arnish asset on the west coast of Scotland. And both these yards are fabricators for the energy and defence sectors. So those four assets under its belt. Historically, it's been a pretty difficult couple of years for the company, but it has a facility in place and has recently announced in November refinanced or has up to 100 million available through Astra Asset Management. So it's refinanced on more favourable terms. In terms of the outlook for the year, the company gave a very strong outlook late last year, but then in December, a lot of the contracts had been, it was announced, had been delayed. So, of course, that in itself was provided, meant that the company wouldn't be hitting its targets for the year. But I say the elephant in the room, it's a very positive elephant. The company announced late last year that it was participating in what was called the Fleet Solid Services contract. A consortium team was put together, Team Resolute, and this is to build 3 support ships for the Royal Fleet Auxiliary. And of course, you have the Navy. People who are keen on the Royal Navy might be watching the current series Warship, which is about the Queen Elizabeth aircraft carrier, very state-of-the-art aircraft carrier. Of course, all these ships have to be supplied whilst on operation. So the auxiliary ships are the ships that carry the munitions, the stores, to resupply ships at sea, the fuel, and so on. So 3 new boats will be built, and this is a consortium of Harland and Wolff, Navantia, and BMT. What this means is that 77 million of investment will be ploughed straight back into Harland and Wolff, and that 77 million is basically going to be updating the resources and the facilities. It's also going to be upskilling the workforce too. So what it will mean is that Harland and Wolff by itself or Harland and Wolff as a consortium can compete on a level playing field anywhere around the world for any shipbuilding contracts or major contracts. And this is it's a huge step forward for the company. But the share price, of course, has been moving up and down quite considerably. I mean, the last week, for instance, we've seen the shares pop up to 24p intraday, and they're currently trading just under 17p today, giving the company a valuation of 29 million. So the outlook, the outlook going forward with the contracts that the company has for 2023, the company projected 100 to 115 million in turnover. But given that some of the revenues from last year have now been deferred into that will increase slightly, and that's based on forecasts before the Fleet Solid Services contract came into being. Then 2023-24, 200 to 230 million. But that's all changed because the company announced 2 days ago that the subcontract, of course, on January the 18th, there was a formal signing of the manufacturing contract with the MOD and Navantia. And then on February 1st, the subcontract was formally signed with Navantia. And this then revealed the financial detail of the contract, which means between 700 to 800 million of revenues will be generated by delivery of the final vessel. This will be a 7-year contract ending in 2031, in 2031. What this will mean is, or equate to, is 107 million pounds roughly per annum additional revenues to Harland and Wolff. So that's a huge, and that's in addition to the 77 million investment into the Belfast and Appledore facilities. So that's a huge addition to what Harland and Wolff have previously forecast, and certainly the share price at the moment very much reflects those previous forecasts. Now, I think, and John Wood, the CEO, is very clear on this. That of course those revenues are coming in. The work has to be done. The facilities have to be upgraded. So it's going to be a while before those revenues start to come in. But with that sort of outlook, that sort of visibility going forward, I think Harland and Wolff is looking monumentally undervalued at the moment, given that there was some calculations undertaken on the previous contracts that equated to a share price around the 30p mark. So considering that with 100, maybe 130 million forecast for this year, you're adding another 107 million on top of that potentially. I think you can see where we're going with this. I think we're looking at a share price that could be up at the 50 to 60p mark. So very exciting for the group. And I think it offers a great opportunity to buy into an industry that puts a British company onto a level playing field globally to be able to tender for shipping contracts around the world.
Excellent. That's a great little summary, Alan. So you're having a share price there of about 50p. So that's a significant increase from where it is at the moment. But I think that's not without merit, as you say, with all the things that are going on, the contracts they've secured there. It seems like the British government is definitely behind this company, which is always useful, isn't it, when the government get behind shipbuilders and infrastructure builders, that kind of thing. So that's excellent. There's a good potential there, given as well, of course. I know we spoke about Harland and Wolff before. They were very undervalued, weren't they? They were really in the doldrums. They seem to have suddenly come back to life. So good for them.
Well, they have, and I think we're obviously there are issues with Brexit as well, and a lot of people bemoaning Brexit and the impact that's had. But I think one of the Harland and Wolff could potentially be a real beneficiary of Brexit. It's a British company. It's been awarded the contract in its own right. and of course, it can now tender for contracts without being hitched to the EU per se. So that's really important. But I think also I mentioned the Island McGee facility. This is a gas storage facility. So if we're buying in gas and you've got a place to store it, the Harland and Wolff facility can potentially store up to 25% of the UK's natural gas. So that could be hugely significant, subject to, of course, the outcome of the court case. So if there's a positive outcome, then there's an asset there which simply hasn't been factored into this.
Indeed. Well, thank you very much, Alan, for bringing us up to speed there on both Panther and Harland and Wolff. And I wish you a pleasant weekend, and let's speak again in a week's time.
Thanks, Mark, and you too.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.